Do you know what your international shipments actually cost? If you're only looking at the invoice from your supplier, you might be missing a big piece of the puzzle. I'm Kari Crane, editor of Shipping Solutions' international trade blog Passages. Before I explain landed cost, what it means, why it matters, and how to calculate it, make sure you subscribe to our channel. When you buy a product internationally, the landed cost is the total cost of getting that product from the seller's location to yours. It includes much more than just the purchase price. Landed cost typically includes the price paid for the goods, shipping and freight charges, insurance, customs brokerage fees, import duties and taxes, government-imposed fees like merchandise processing fees or harbor maintenance fees, and in some cases, value-added tax or sales tax. Think of it like this. The sticker price is just the beginning. The landed cost tells you what you're really paying once everything is said and done. Understanding landed cost helps you budget more accurately, avoid unexpected charges or shipment delays, forecast and plan across your supply chain, price your products competitively, and choose the most cost-effective suppliers or distribution centers. Let's say you import goods from Mexico at $1,000 under the EXW Incoterm. Once you add $250 for shipping, $100 for insurance, and $150 for duties, your real cost is $1,500. Knowing that upfront prevents costly surprises for your finance or logistics team. The Incoterm you use will significantly impact your landed cost. For example, under Ex-Works or EXW, the buyer covers nearly all costs after the goods leave the seller. Under Delivered Duty Paid, or DDP, the seller covers shipping, duties, and taxes, so the buyer's landed cost is minimal. Knowing which Incoterm applies helps you determine who pays for what, essential for an accurate landed cost calculation. Click the link in the corner to download a free chart comparing all 11 Incoterms. There's no single formula, but here's a framework to guide how you calculate landed cost. Start with the purchase price of the goods. Add all shipping costs, including domestic and international legs of the journey. Include insurance premiums for cargo. Add import duties and tariffs based on the correct HTS code. Factor in extra fees like customs brokerage, MPF or HMF, VAT or sales tax if applicable. Convert currency if the buyer and seller are doing business using different currencies. And be careful with your tariff classifications. Misclassifying a product, even accidentally, can result in penalties from U.S. and foreign customs authorities. Spreadsheets can get messy fast. That's why we created the Shipping Solutions Landed Cost Calculator. With just a few inputs like countries of export and import, product details and pricing, you'll get accurate landed cost estimates, landed cost per unit, information on free trade agreements or duty preferences, and the ability to compare multiple sourcing options. This tool saves time and helps you make smarter, cost-effective sourcing or sales decisions. Click the link here to give it a try for free or watch the video to see it in action. Thanks for watching and don't forget to subscribe.